looks like we're getting up to a critical mass, so let's go ahead and get started. Good afternoon, everyone. Welcome to today's investor briefing. The purpose of today's meeting is to discuss some considerations for responsible investors to have in mind about the upcoming IPO for the home sharing company known as Airbnb. My name is Anthony Schein, and I lead Share's shareholder advocacy and public policy work. Share, as you probably know, is a leading Canadian nonprofit organization. We're dedicated to mobilizing investor power to build a sustainable, inclusive, and productive economy. We work to achieve that mission through advocacy to companies and policymakers on behalf of institutional investors, by developing and empowering investor networks, and through timely research and education for asset owners and trustees, including through meetings like the one we're having today. As I said earlier, today's meeting includes participants from all across North America and even in Europe, but I'm here in East End Toronto. So just as we get started, I want to acknowledge that the land where I am today physically is the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, Chippewa, Haudenosaunee, and the Wendat people, and is now home to many diverse First Nations, Inuit, and Métis people. We also acknowledge here in Toronto that the city is covered by Treaty 13 with the Mississaugas of the Credit. So wherever you are today physically, please take a moment to acknowledge the Indigenous people in your area. So many of us are aware of Airbnb as a company, whether from our own travel experience, from the ubiquity of confused looking tourists looking for like key boxes in our apartment buildings or around our neighborhood, or because of the many high profile battles between the company and regulators in cities from Barcelona, Vancouver, San Francisco, and all points in between. So on today's call, we want to discuss a bit more about what issues investors should be considering and what questions you should perhaps be asking as the company gets ready to go public. I think that includes some key governance questions, some of the regulatory and other risks the company is exposed to, and the underlying question of how the company's business model aligns with responsible investment principles. The housing crisis in Canada is, I think, certainly most acute among low and moderate income people, but the combination of a supply shortage, the lack of public investment, pretty lax tenant laws here in Canada, and real estate speculation have had impacts on housing affordability across income levels. And in major urban markets like Toronto and Vancouver, increasingly both homeownership and rental housing are out of reach. So we talk a lot about the public policy levers that are available to address that affordability crisis, and certainly those are crucial. But there are also investor impacts, good and bad, on how the residential market shapes up, and that's part of why we're here today. So with that, I want to introduce our panel. We've got a panel of experts with us from Canada and San Francisco. So first up, I'll introduce JJ Fueser, who's a researcher and consultant, and she works with the Canadian coalition known as Fairbnb. Leilani Farha is the former UN Special Rapporteur on the right to affordable housing, and now leads The Shift. She's a leading thinker and speaker on housing financialization. Bahar Shadpour works with the Advocacy Center for Tenants Ontario. That's an organization that works directly with tenants who are often being displaced by gentrification generally, and in many cases losing access to housing directly to short-term rentals like those listed on Airbnb. And ACTO is an active supporter and participant in the Fairbnb coalition. And finally, Dale Carlson, who we'll refer to as Carlson, is a consultant based in San Francisco, and he works with ShareBetter San Francisco, which has been working with tenants and homeowners and hoteliers to implement effective regulations in that city since, I believe, 2014. So Airbnb is set to start trading next week on December the 10th, and it's got a valuation of 35 billion US. So I know both JJ and Carlson, you've spent quite a bit of time looking closely at some of their regulatory filings. So I'm going to ask you to talk a bit about what you found there. I guess, Brian Chesky, who's the CEO of Airbnb, he's not quite the household name of some tech executives, but it seems like he's got a pretty strong founder's personality. So I'll open it up to the two of you. What have you found in the filing so far? Don't be shy.
Well, ShareBetter San Francisco joined a coalition of 46 community, neighborhood, and housing organizations from 7 countries and 3 continents. Fairbnb Canada was part of that, and we signed a letter to the chairman of the Securities and Exchange Commission asking the SEC to ensure that when Airbnb made its public filings in preparation for its stock offering, that it disclosed how much of its revenue was coming from rental units that it was providing to tourists illegally, and how much of its revenue was coming from commercial operators versus the home sharers offering an extra room from time to time, which is what Airbnb continues to promote as the foundation of its business model. Unfortunately, the filing that Airbnb submitted to the SEC and has now released to the public is woefully deficient on both of those questions. They continue to promote home sharing when in fact, most of their revenue and most certainly their profitability is dependent on people with, in many cases, hundreds and hundreds and hundreds of units that have been illegally converted from residences to full-time tourist accommodations. And that's deeply troubling.
JJ, do you want to add to that? Oh, you're on mute.
There we go.
There we go.
We've very much observed the same dynamic on the Canadian side that, you know, in effect, if you were to describe what this business model is, it's become a method of vacuuming up units that have been zoned and built to provide housing and moving them, sort of financializing them as tourist accommodations. But it's equally important, I think, that this, you know, the true story is kind of obscured by the myth of home sharing, which is something we've observed in over many years. That story is repeated in city councils around the country when we push for regulations.
I know that you did take a look at specifically at some of the proposed governance structure and how that's expected to work. Can you share that with everybody here?
Yeah, I mean, I think there's an understanding when a company goes to the public markets to raise funds, you know, you get access to a great deal of capital, but then you also agree to provide a certain amount of disclosure, visibility into your operations, and a modicum of shareholder voice. And you know, I think Carlson has referenced, you know, and you should say more about the deficiencies in the disclosures, but on the topic of voice, it's very interesting. It really jumped out at me how many layers of insulation there are between the kind of founding insiders, the key employees, and prospective shareholders. To start off with, there are, I think, the company's going forward with 3 classes of shares. Class A shares are the ones that will start trading presumably on December 10th. They have 1 vote per share. There is also a Class B that's mostly held by the founders, key employees, directors, and large shareholders that have 20 times. One share carries 20 votes. And then you have a small amount of shares. I think it's like 0.5% of the float set aside for hosts, which carry, or they're saved for the benefit of hosts, and those carry no votes whatsoever. And so we found out, I think, a day or 2 ago that the Class B shares carry almost all of the voting power when everything is added together. So already at this point, you know, independent shareholders will have practically no ability to influence really important matters like who's elected as a director of the company, what will the approving executive compensation, voting on important matters like mergers and acquisitions or shareholder proposals. The 3 founders themselves, I believe the estimate is that about 40% of the voting power belongs to those 3 people alone. So you have that, and then on top of that, the company has structured Airbnb as a public company. They've borrowed several other tools to that have been traditionally used to limit shareholder voice, from a shareholder perspective. For example, one of the most important ways shareholders can feed back to the company is to vote on the directors annually. Here, directors all have a multi-year term, and shareholders can only vote on a few people each year. Directors can only be removed for cause, so things like criminal negligence, not if you disagree with where they're taking the company, for example. And stockholders are not empowered to call a special meeting right now. So there's that. Then on top of that, there's a voting and nominating agreement between the founders. It's sort of a mutual support agreement that they will nominate and campaign for each other's election. And then finally, on top of that, there are super majority voting requirements, so a very high bar. Shareholders would have to meet even in the absence of this multi-class structure to change any of these corporate governance procedure measures. And all of that, I should say that the 20 times voting power could last up to 20 years. So I think, we have kind of a new vision of corporate governance that's emerged from startups and the tech sector, and there's an argument where you say, okay, this is a newly launched company. We want to make sure it's not subject to hostile takeovers. But on the one hand, surely there are ways to protect against immediate hostile takeover attempts that preserve a modicum of accountability to shareholders. You see very little of that there. And, I would say that sort of felt very familiar to me, having spent years trying to hold the company accountable to within the community. These practices, these corporate governance practices may be a little bit more prevalent in the tech sector. They're not in the hotel sector. And I know institutional investors have pushed for decades to see improvements. So maybe it's time, as we push for accountability for big platform companies like this to communities, there's also room for shareholders to push for shareholder enfranchisement and voice within these publicly traded companies.
Mm-hmm. So there's a lot we could talk about there, just in terms of the strict governance piece. But you were also talking a little bit about how you've been involved in attempts to regulate Airbnb's business, and I know that that kind of everybody on the call has been involved with that to varying degrees. This is, like some of those other tech companies, not one that has been very responsive to some of those regulatory measures. But I guess I wanted to get a bit of an outlook from you, and also a bit of background on sort of what the situation has been in cities around North America to try and bring some organization to the way home sharing has been working. So I don't know who wants to go first with that, from all these cities that have been really hands-on and trying to bring some control to what's sometimes called kind of Wild West behavior.
Well, the Wild West is an accurate description of it. When ShareBetter San Francisco was formed and started working on effective regulations of short-term rentals in San Francisco, we had somewhere between 14 and 16,000 units that had been illegally converted to full-time tourist accommodations. Airbnb had about half the market for short-term rentals in the city. We put in place something called platform accountability that allows Airbnb to list and rent anything that it wants, but does not allow it to collect a booking fee on any unit that's illegal.
Okay.
Airbnb challenged that ordinance in federal court here in San Francisco and lost. And overnight, we saw the number of Airbnb operators, in not listings, operators in the city drop from 8,500 to today fewer than 2,800. And as soon as the law became effective, we saw an enormous spike in the number of full-time rentals that were advertised as available. That model has been the most effective regulatory structure that that any city, I think, anywhere in the world has developed. And given San Francisco's experience, it became quickly attractive to other cities across the country: Boston, Washington, D.C., Los Angeles, San Diego, Santa Monica, California, all adopted platform accountability as the foundation of their regulatory structure for Airbnb, and they all saw similar results. Denver is the most recent city, just in the past 2 weeks. After negotiating with Airbnb for more than 2 years to try and bring the company into compliance with the law that Airbnb helped craft in Denver and routinely ignored, Denver finally said, fine, we're not only going to fine the operators for their illegal activity, we're going to fine the platforms that enable it. It's become an increasing problem for cities. Airbnb has gone to great lengths to disclose, supposedly, the risks to its future business prospects. But when you go through that statement of regulatory risks, it's almost like boilerplate language that would have drawn from the IPO filing for any company. There's very little that's specific to the unique risks that Airbnb faces. And among those are the fact that a lot of the offerings that they have today are illegal under laws that exist on civic ordinances right now. You don't have to worry about future changes to those ordinances. If the city simply enforced the laws that were on their books today, a huge chunk of Airbnb's listings would evaporate. In Los Angeles, for example, the fourth largest market that Airbnb has in the world, they talk about an ordinance that the city adopted in 2018 that went into effect in 2019, where Airbnb agreed with the city to provide an automated system where they could check the legal status of each and every listing that they were going to carry in Los Angeles. They reached that settlement agreement in November of 19. Just last week, an organization much like mine in Los Angeles did a study and found that 2/3 of Airbnb's Los Angeles listings are illegal under the very law that Airbnb claims to support. And
that's a pretty bleak picture from the U.S. in terms of how compliant the company has been with the existing laws. Bahar, can you share what the situation has been here in Canada? I suspect it's fairly similar, but
it's quite similar. It's the same tactics that the company uses to dodge the regulations that are in place. So in Toronto, it's been over 4 years. We, as part of Fairbnb, I work in the housing sector, specifically in the rental housing sector, and we've been trying to regulate Airbnb and other short-term rental platforms, and it's been an uphill battle, and at every corner they have fought us in every way possible. And what's interesting is that the regulations in Toronto are actually quite fair. And in fact, before the city of Toronto passed the regulations, short-term rentals, the use for the properties for short-term rentals were not allowed. So in fact, the regulations have allowed for these short-term rentals to become legal as long as they're a primary residence. And then there are caps to the number of days, that 180 days and within a year that you could rent your home on the platform. And if you go actually to the slide before this one, Anthony, there's like a history, or not I don't know, is it after the
Describe what you want, and I'll try and get there for
it's
you.
like it's the same within the same slide deck, but it kind of shows like the Toronto's regulation and how from 2010 when Airbnb started its operations here up until 2019, the regulation with the city of Toronto kind of started in 2016, and those discussions and it started then. And as the company fought against these quite fair regulations, the company's operations grew. So as you can see, thank you. Their business grew, and yet after the regulations were passed, the city could not enforce it because then these were appealed. So they were appealed until it took a year for these appeals to be heard. And so now we're at a point where we're in 2019, and by January of 2020, the hosts are supposed to sign up with the city to, with the platform to get a number that they're registered, and many have not signed up. I think actually someone put in the chat the number of people that have signed up, and so now we're at the point of enforcement. And how that's going to look is going to be interesting, because we have not seen the company accountable to any of these laws and regulations that have been put in place. And I just want to kind of add what this really means on the ground for people in Toronto, because Toronto is the biggest, most populated city in Canada. It's the 4th largest city in North America. And a lot of people come to Toronto. This is where the jobs are. Some of the fastest growing population of renters who are young folks between the age of 25 to 34 come to Toronto for jobs, and they're the future of our workforce. And they have been priced out. They are struggling to make ends meet because they can't find housing. And the evictions that are based on the incentive for these short-term rentals is quite concerning, where it's become regular practice when this is especially before the pandemic, when if a tenant was evicted, the first thing they would do was go on Airbnb to find that their unit was there. And though the landlord may have said that they might be using this for their family member, or they're making they're doing a renovation, but really the short-term rentals have been incentivizing these no-fault evictions of ordinary people.
Mm-hmm. Well, so I want to come back to the pandemic piece, because I guess in all of these conversations right now, we always need to come back to what's the pandemic impact, or how has COVID changed things. But I think you really started to get at the kind of underlying issue here, which is increasing inequality and real negative outcomes for tenants. And Leilani, this is something that you've worked on a lot, and a process that you've kind of described as the financialization of housing. And as I'm looking at my screen here, that word is underlined in red, as it always is. Microsoft won't recognize that yet, which probably means it's probably a good idea to start out by just sort of defining what you mean by that, and what that process is.
Yeah, thanks, Anthony, and thanks to my co-panelists. You've all already enlightened me. I am by no means an expert on Airbnb, but I have spent a fair bit of time on this word and this concept and this phenomenon, financialization. And Anthony, even though I've been using the word forever and a day, it's still read in my Word documents as well, and Outlook, etc. So the financialization of housing is what I've concerned myself with for a few years now, and it really just refers to where housing is treated principally as a commodity, as a place to park, grow, leverage, and hide capital. And it is, I am using the term as a kind of new phenomenon, relatively new phenomenon. By financialization of housing, I'm not talking about mortgage-based housing systems. Those have existed forever. Yes, housing has been a commodity forever or for a very long time, but that's not quite what financialization gets at. We're talking about a new set of actors who have uber amounts of money, unprecedented amounts of capital, and are using housing, or what they call residential real estate, as a way to grow their capital and leverage more capital. And Airbnb fits into this quite squarely, or short-term rental platforms, not just Airbnb. I actually wanted to start my more substantive comments where Anthony left off. When I think about this issue from an investor point of view, it's exactly what Anthony and actually Bahar mentioned these things too. I would like investors to think to themselves, through my investment, do I want to contribute to the gross inequality that I see on the streets of any city I visit, right? Do I want to, as an investor, contribute to the things in a city that make me uncomfortable? Homeless people on the streets? Do I want to contribute to, through my investment, to creating a city where first responders to a pandemic, or the very people who run cities like firefighters, police officers, baristas at cafes, can't actually live in the cities that they are helping to run? Is that how I want my investment to work? I mean, I think those are just some really live questions. I come at this actually from a human rights place. Obviously, some of you will know I was the former UN Special Rapporteur on the right to housing, and I've spent all of my working life working on the right to housing. And Bahar already pointed to some of the ways in which these short-term rental platforms, Airbnb in particular, have an impact on the right to housing. So governments around the world have committed themselves to the right to housing. They've signed all these international treaties saying, yeah, we commit ourselves to this. The right to housing just simply means the right to live in a place that's secure and affordable and can provide you with some dignity. That's the shorthand definition. And we see many ways in which these short-term platforms are really compromising the ability of people that Bahar mentioned, young people, racialized people, migrants, refugees, people with disabilities, single parents, really undermining their ability to enjoy the right to adequate housing. So I'll just pinpoint a few that I have identified. You all actually know the sector far better than I do, so you could probably come up with more. But we've already heard about the depletion of affordable housing, or at least of housing stock, as a result of Airbnb. I have a statistic from the UK that 2.7% of the UK's 1.5 million landlord population has switched from long to short-term rentals. Well, that's fairly sizable, right? And that's just a switch. They were renting long-term and now they're renting short-term. In the US, we know that more than 600, and these, I think these stats are maybe a year old or so, of the 1 million Airbnb listings in the US, more than 600,000 are hosts that operate at least 2 other listings, which suggests, right, that they are using other units for Airbnb that could be long-term units. So that's the first thing, the eating up of stock. And Bahar mentioned, I think you mentioned, or you mentioned before the panel, but that in Toronto, you know, there are thousands of units that could be actually long-term rentals, more than 6,000, I think 7,000, that could be long-term rentals if regulations were abided by. The other thing that a lot of reports say, this is way outside I can't do these numbers, but that Airbnb really does have an impact on the level of rents. So pushing rents up. In Barcelona, a study found that Airbnb had increased rents by as much as 50% in certain neighborhoods or barrios. And the third thing is that we're seeing an investor-driven development, and that part of that is Airbnb. And by that I mean, rather than having, you know, development projects that are actually for local residents who can't afford the rent, or, you know, young people who have, you know, their first job and should be living in the city where they just got their first job. What we're seeing are these, and Toronto is such a good example of this. We're seeing these development projects go up, and they are clearly intended for investors, not for the investor to live there, just for investment's sake and for short-term rentals. And I think the fact that so many condos in Toronto right now aren't being sold, these little teeny cubicles aren't being sold, I think those were all intended as short-term rentals. The last thing I'll say is, Bahar, and I want to really underscore what she said because it's so important, this issue of evictions. In fact, I actually first got onto this issue when my nephew called me and said that his landlord had applied to evict him because he wanted to use the unit for personal use, but he had this sneaking suspicion it wasn't really for personal use. So I suggested to him that he monitor the place, and he did, and he ended up getting all these photos, and it became clear that the landlord had turned it into an Airbnb unit. So that's how I got onto it, but this is a huge issue that really needs attention. I'm going to just end with one further thing, which is where I haven't gone yet, but I've just started to do some research on, and I'm hoping my new friends and colleagues will help me with this, is trying to understand the legislative and policy frameworks that invite in investor-driven housing. You know, so it's not about, I'm not talking about regulations that Airbnb tries to dance around and get around and all of that. What I'm talking about are, what are the legislative policies that make it so attractive and easy for people to enter a housing market as an investor, as opposed to as someone who wants to create long-term affordable housing, for example, for the community at hand?
That's lots there. So I'll ask everyone to come back to that last question. But first, it does kind of come to a question that was asked in the chat here a couple different ways. And for people who are in the audience, if you want to ask questions using the chat box, please feel free. So it's asked a couple different ways, which were basically, you know, how can we fault this company for, you know, for the fact that local governments aren't properly enforcing their own laws? Like, you know, is that a reasonable expectation that that companies will be, you know, compliant with laws that that governments have no intention to enforce? And, you know, isn't that the comment that was in the chat here is basically, isn't the solution to deal with, you know, local elected officials who aren't willing to crack down? So I have my own thoughts on that one, but I'm certainly curious to hear from you all, I guess, any of you who want to speak to that. Like, is, you know, I think all companies will you know, work to find what they can do usually within the confines of the law, but certainly, you know, try and find opportunities. How does Airbnb stack up, I guess, in that particular way?
Carlson, you want to kick it off?
Yeah, you know, this is a company, Airbnb is a company that, like a lot of other startups in this part of the world, the venture capitalists who put money into them say, get big as fast as you can. Ignore the rules, ignore the regulations, ignore the laws where you can get away with it. Just get so big that you have brought a change to the world that is so disruptive that government officials have to deal with you on your terms, you know, to bring the laws up to a level that allows you to continue to do your business. Airbnb doesn't care whether or not the rentals it offers are legal or not. They don't care whether or not the owner of those units has granted permission for the unit to be offered to tourists. In fact, they will continue renting units after the owner explicitly objects and asks them to cease. It's really quite remarkable. We had a legal tussle in the States between a publicly traded REIT that owns 36,000 units all over the country and Airbnb. It was a clash of titans. I mean, there's a two multi-billion-dollar corporation. Aimco had asked Airbnb to stop listing its units. that its tenants were subletting on Airbnb, and Airbnb refused, and Aimco had to sue in Los Angeles and in Miami, and finally Aimco prevailed, and will no longer find co-owned units on Airbnb. But you know, the fact that you've got a public company that behaves like that, or a company that wants to be public behaving like that, you know, in so many cases, this is not a question of a company facilitating illegal activity. They're profiting off of it. It's foundational to their business model. You know, facilitating illegal activity, that, as someone said to me, that's a polite way of saying they're aiding and abetting.
Mm-hmm.
Sorry, JJ. I just wanted to add to that as well, that I think this goes back to the myth of home sharing, that is Airbnb as a company. At the end of the day, the public message that we hear from Airbnb is that they're just a flat platform that are facilitating these the business between, you know, the homeowner or the tenant and the person that's renting from them, which is really not the case. And I think that's what the feedback is, should be, is that Airbnb is beyond just a platform that creates that facilitation, and they are making enormous profits at the expense of regular people who are living in cities. And I think that's, you know, when we go back to where their revenue comes from, and both Carlson and JJ kind of mentioned this, it's most of their revenue in Toronto. If you look at Airbnb listings, the majority of listings are actually compliant listings, but the majority, more than 70% of their revenue, comes from commercial hosts, from ghost hotels. So we really need to kind of think about that when it comes to accountability, and as a company, Airbnb has to be accountable, especially as they go public.
Yeah, I mean, I think that's kind of the question. And you know, we did notice after sending in the letter from all the housing organizations in the registration system, there was kind of a passing reference to, well, in our key municipal markets, we don't think that pending regulation will have a material effect. Toronto is one of those, one of the 10 key municipal markets identified. And as Bahar just said, full compliance would have a significant effect on revenues. And we know there was a McGill University team that took a look at this issue across the country and said, on average, they think 50% of Airbnb's revenues come from commercial multi-listing hosts. So not home sharers, who are often the face of the company. And that's precisely the segment where, if you have a municipality or a resort market that's facing a housing crunch, that's where we have to free the housing up. That's where neighborhood activists and housing activists have focused, and often with some success. You know, so to me, that means that statement, the investment thesis that, you know, we're being asked to, like, this is a hospitality company, I think, is one of the remarks said, that's going public in the midst of the worst hospitality slump we've seen in living memory. You know, the investment thesis is really either we will successfully challenge those laws, or they're not going to matter. But the fact is, they're going to start to matter. It takes a long time. And so we're only starting to act of some of these regulations. In Toronto, as Bahar said, we started this in 2016, and it's going to be in January where the city of Toronto is going to say, okay, anything that doesn't have, you know, we're going to try to do the San Francisco model. Anything that doesn't have a valid license from the city of Toronto, for which you need to be a principal residence, it has to come off. And the key thing there, you know, is there have to be consequences for when that doesn't happen for the platform. And that's really kind of the next thing that needs to change. The thing that San Francisco, I think, has modeled successfully. And you know, in a lot of Canadian markets, we're seeing, you know, regulators are still playing catch up, and so there may be a delayed effect of this, but you know, it's municipalities are learning from one another. They're learning about how to regulate. They're learning about how to enforce.
So you kind of did bring us to the a bit to the COVID piece, and I think a question that's sort of hanging out over all of this is like, why now? Like why is this all happening right now? Why is this company going public now? And we do have a couple of comments related to that in the chat. In particular, the idea that maybe what the current COVID experience in the rental market is showing us is that, in fact, you know, there's some market, you know, market forces that will play out here, and you know, the rental market's loosening up a little bit, and you know, perhaps some housing stock is going back into those longer term rentals. So I guess I'll open it back to any of you who want to talk about sort of why now. Like, why is this happening now? And related to that, like what is COVID doing to housing markets in Toronto, in large urban centers, Vancouver, San Francisco, but also in other markets across the country, like across the continent? What is happening to the housing market and the rental market?
I can talk to why I think it's really happening, but if anybody from the housing sector wants to talk about the impact, you know, feel free to.
Well, why don't you get started with why is it happening now? Because I think it's
it's an excellent question, because if we consider this a hospitality company, the IPO is coming at a pretty strange time. It feels like it's either a couple of years late or a little bit too early. Like, you want to, if you're thinking about it as an investor, and to be sure that it's a notoriously cyclical industry, you want to be starting at the beginning of the recovery and then ride the wave to the peak. But it's far from clear that the worst is over here. And so we have a snapshot of Airbnb, where, you know, there's a lot of talk about this miraculous third quarter. And, you know, Dale, I'm sure you have thoughts on this too. But often, one of the things we did learn from the registration filing is the third quarter is often the company's only profitable quarter. And that was achieved this time around in 2020 in large part due to extreme cost-cutting measures. 25% of staff laid off, consultants, get rid of them, and the marketing and sales budget practically in a way that, you know, in a market that's increasingly competitive, one wonders if that's really sustainable. We're also not seeing the full impact of the second wave of COVID, and various other factors that may slow down the recovery. I think we should take a quick look at slide 13, the way the hotel industry is currently looking at the recovery, just to give you a picture. You know, we've had a couple of really significant slumps in tourism in our memory, post-SARS, the financial crisis, and you know, here we go. And COVID has battered the industry in ways really we haven't seen before. 9/11. Now, and so this is what the hotel industry is expecting. And here we have leisure travel, business travel, meetings and conventions, business all being reflected in these expectations. Airbnb is more than the hotel industry, rides on the fortunes of the leisure market. You know, and if we expect to see what the thing that the hotel industry doesn't have to deal with is kind of this factor we've been pushing for more disclosure around, which is the wave of regulation. if we see in these key urban markets that have been driving Airbnb's business, a shrinking of these entire home rentals, these commercial ghost hotels, that really Airbnb's ability to participate in the business conventions, meetings, travel that you can, book ahead. So what's really going on there are other factors that are influencing the timing. I think this is slide 14, Anthony. One is simply a need to refinance. As things really got bad in April, Airbnb had to take out 2 high interest loans worth about $2 billion. And then I think someone in fact just answered this question. The other thing that was going on is that stock options for early employees were starting to expire beginning this November. And what we've just learned is that they're worth about $2.8 billion when vested. So this IPO basically satisfied the one remaining condition for stock-based compensation to be satisfied. And without that, if it had gone out of that window, that would have been essentially lost. So I think that may have been a significant driver of the timing.
Oh, that's a pretty big one, I think, for everyone to be aware of. So I'm a bit mindful of time. I want to make sure to leave a bit of time for further questions from the audience. But I do want to just ask the question, like, what is happening in the housing market during the pandemic? Like, is everything fine now, given that people are moving back in with their parents and like working from home? Has that fixed everything?
Well, I can tell you in San Francisco, we've seen a net drop in population of about 100,000 souls since the pandemic kicked in. Some of them are likely to come back, but many of them have decided that if my tech company will allow me to work from anywhere, I'd rather be someplace that's a lot less expensive than San Francisco, and gives me a better outdoor life than I can have in a major urban area. And I think you're seeing that reflected in Airbnb's numbers as well. People are not renting Airbnb units in cities any longer. They're looking for places that are more remote, more pastoral, in the country. And the response from small towns and small municipalities to the influx of Airbnb rentals has really been quite striking. I mean, Airbnb's draft IPO registration statement was issued on the 16th of November. And in that time, I found 12 US cities, the largest being Denver, the smallest being Park Rapids, Minnesota, population 4,200, all announcing plans to regulate short-term rentals, to crack down on the proliferation of short-term rentals. Because it's, you bring your party from Toronto or San Francisco to Park Rapids, Minnesota, and it disturbs the neighbors. And second, you're chewing up housing that makes it unaffordable for people who work in small businesses and restaurants and non-tourist serving enterprises. It makes it much more difficult for them to find and afford housing. So we've got cities from coast to coast, from Monterey to Lake Tahoe to Nantucket, that are all looking at cracking down on Airbnb listings and rentals. And those are essentially long-term. I mean, they like to tell this comeback story that they survived COVID. If you look at the record, in 12 years, this company has only booked 3 profitable quarters in its entire history. And we're looking at losses, as far as the eye can see. It's really quite remarkable.
The same.
Yeah, go ahead.
It's very similar trends here in Ontario and Canada. We have Prince Edward County, which is cottage country here. They are struggling with such an influx of these short-term rentals. residents who need to live and work in those towns are unable to find housing. And in big cities like Toronto, we're seeing the high-end condo market. Leilani kind of mentioned those, little micro units that we're seeing them from, in April onwards. We saw an increase in those listings. However, I think it's premature to discuss what that impact has been on rents alone, but for low to mid income folks that live in the city, that still are working in the city and need to stay here, the rents have not significantly dropped. They've gone from $2,400 to $2,200, when someone who needs to, living on $14 minimum wage or even $20 an hour is unable to rent a 1-bedroom. So the impact, the negative impact continues. And I just want to
we are seeing an increase in evictions, right?
And exactly. Yeah. And we're seeing an increase in evictions where, a lot of people that are investors buying up units, it's a great time to do that. And again, ordinary people evictions are on the rise. We're fighting on the ground to stop these evictions. And in certain parts of Ontario, for instance, we're seeing 200% increase in evictions compared to same time last year. So it's really, it's horrifying, the situation.
So I've got one more question from the chat that I'm going to put to you, and then we'll start to wrap up, which is just the last one that's popped in here, which is whether there's any liability to the company from super spreader events happening in listed properties in terms of COVID, or any of the potentially illegal activity that does happen in Airbnb properties. Is there any liability that comes back to the company for that?
Well, that's going to be interesting to watch. We had there's a suburb of San Francisco called Orinda. A year ago at Halloween, someone rented a house in Orinda, threw a Halloween party. 5 people were shot and killed. And the owner of the house, as well as the families of the victims, are suing Airbnb, making just that. Another 100 in one city after another, for violation of that ban. And if somebody can trace their exposure to COVID to a party they attended in an Airbnb, I don't know that they'll prevail, but I wouldn't be surprised to see the case go forward.
Yeah, and I think that raises a really important, like, to zoom back out, a really important issue about the liability shield, the regulatory risk we're seeing. Of course, you're seeing cities move to protect housing stock, cities and communities, but more and more, and there's an awareness that we need to close these loopholes applying to platform-based companies, that just because you sell things from the internet doesn't mean that you can dodge the laws that apply to the incumbent industry. And so one thing to watch there in the US are kind of challenges from both sides of the aisle of the Communications Decency Act, which shields internet companies from liability for things that are posted on their platforms. That's been sort of a key protective defense that Airbnb has used, that's coming under threat. Definitely conversations like that happening at higher levels of government in Canada. And I think just yesterday, it was an announcement that provincial, the GST would start to apply to sales of online businesses like Airbnb units. So I think the regulatory loopholes are shutting, on various levels, and you know, we really need that to happen.
I think I'll just put it back to kind of closing comments here, and maybe I'll ask you specifically. I mean, you can close out however you like, but one thing I've just had in my mind as we wrap up is there any way for a company like for short-term to do business responsibly? Is that like a business model that is workable in a way that's not consequences? To answer that question, or share your closing remarks, and maybe I'll let Bahar go first.
Sure. I mean, they just have to follow the regulations. It's about you know, accountability to the communities that they're serving and impacting. I think one major distinction we need to make between Airbnb and other sharing economy type platforms is that they're in the business of people's homes. And it is quite different when you're talking about people's livelihoods and their housing. You know, we look at this, housing is a human right. It's a fundamental need that people need, that everyone's life kind of starts with housing. And so when we're talking about specifically home sharing platforms, I think it's really important to distinguish the business that they're in, and to be able to kind of close off the commercial part of the operation, so that it's true home sharing.
Thanks. Leilani, do you want to wrap us up?
Sure, and I completely agree with what Bahar just said, and would only underscore it. I mean, I think that's the question. Can this business, with its current business model, be responsive to the requirements of the right to housing? And that, you know, that I think has yet to be determined, because when the regulations come in, as we've heard over and over from all three of the other panelists, you know, this is the highly litigious business, Airbnb in particular. So they're constantly pushing back against things that would in fact help protect and promote the right to housing. So I think for me, there's a big question mark as to whether the business model in its current form can comply. My sense is that maybe it can't in its current form, and that it has to go back to the home sharing original idea. Yeah.
Great. And Carlson, JJ, 30 seconds each. I'll let you add any closing thoughts.
Well, I think two things. I mean, no one orders up an Uber or a taxi and asks to see the driver's license before they get in the vehicle, because we assume that Uber and the taxi company have already verified that the guy knows what he's doing. The same should be true of Airbnb. If you're going to limit, if you're going to allow home sharing in primary residences, and subject to licensing and business certificates and that sort of thing, Airbnb ought to live with that limitation, and they ought to be given some skin in the regulatory game, because the idea that a city, regardless of its size, is going to be able to pursue 50 or 60,000 individual illegal operators on its own, that's a Sisyphean task. You're never going to get those housing units back. So it's important to give the Airbnb some skin in the regulatory enterprise.
Thanks.
Okay. Well, Anthony's pulling up the key questions for investors. I'll just put in a plug for, there is one cooperative model that's sprung up in Europe that happens to have the same name, Fairbnb co-op, which is home sharing only. That is worth taking a look at. But it's very different. Like there is, I think I would underscore what Leilani says, a perverse incentive to financialize housing in the business model that we're currently dealing with. And for the investors on the call, here's some final questions that we hope you'll take with you into the Airbnb Roadshow, because I don't think they cover these topics. So again, quantify the revenue from illegal listings, grapple with the impact of pending legislation, grapple with the fact that the listings that are supposed to be picking up the slack from COVID are much smaller than the urban mainstays. And then a couple of questions around the impact of the cutbacks. Somebody else raised on the call, I think it was Murray, the 2.8 billion in stock options that are realized through this transaction can also be disposed of in a relatively quick manner that could impact investor value. And then finally, a plea to raise questions around these multiple limits to shareholder voice, so that we can actually address some of these questions.
Well, you've got some good questions for any of the investors who are on the line today to take with them and to put to the company if you do have a chance to participate in the roadshow. We'll wrap it up there. We'll certainly send around some follow-up to those of you who were on the call today, and I know there were those who couldn't attend. We'll share some information there as well. But thank you so much to all of our panelists today and to everybody who joined us over the internet. And I hope you have a great afternoon, and we'll speak again soon. Thank you.
Thank you very much.
Thank you very much.
Thanks for hosting, Anthony.
My pleasure.